Welcome back, everyone. I'm really excited for today. I have my good friend, Dr. John Terry. This guy is amazing. He came to the Annuity Producers Conference last year. We've got to know each other over that course of time, and he's got a very unique story. So I definitely want you to share that today, John. But more importantly, as well, is who he represents. Legacy. Now, this is a group that we have done quite a few policies with. I mean, over the years, we've done tons of premium and they're very easy to work with. They have unique product structures. And you guys, most of you out here don't really know about Legacy. You're not familiar with it. We've talked to a lot of agents about, hey, who do you write business with? And some of you may have not even have heard of them, never submitted a contract, and you're missing out big time. Okay. And Legacy is making some huge movements to become way more known within the industry. We all know all the big giant names because they market and the big IMOs push them. But Legacy is up and coming, and they've been around for a long time. And I can't wait for everyone to learn more about their story. And then I'll share a couple of case designs that I have personally used with Legacy and how we plan to implement it more this year in 2026. So, John, tell us more about yourself and your really cool background. I'll give you a hint, everyone. His background matches the hand wrap on my hand, but not as cool as a story on my hand.
Hey, Roy, it's a pleasure to be here. For those that don't know me, my background and the standing joke at my house, when my daughters would bring a boyfriend into the house, they would say, "This is my daddy, punch, kicks, and kills people for fun." And the response back to the boys would be yes, and I taught my daughters to do the same. So growing up, it was a great opportunity to make sure they had good dates and they didn't date guys that would treat them wrong. But my background is I've been in the martial arts for a number of years. I'm a three-time Martial Arts Hall of Fame inductee. Been privileged to work and serve the United States Martial Arts Hall of Fame since 2017. So every year we gather together black belt instructors and martial arts enthusiasts from around the world for a big 3-day event where everybody gets to be a white belt. Everybody gets an opportunity to learn from some of the greatest of the great. And 15 master level instructors over 3 days, learning different martial arts maybe you've never heard of before, and finding out how they can take some of that back to their school. That's what I do in my fun time. Now, what allows me to do that is the company I'm privileged to work for, and that's Legacy Marketing Group. My role here is I'm the director of training. And what I do is I help individuals and organizations identify sales opportunities they may be missing, understanding how to build incredible teams that can allow their business to scale with them, and then work on communication, work on understanding human behavior, and other elements of business that are often overlooked or ignored.
That's awesome. So here's what's really different too. Most of the people in your position that work for big insurance companies, they don't have that type of diverse background. They're simply going to come out there and say, look at the caps, look at the pars, look at the income, and that's it. Whereas what you bring is a whole other level of service, which is coaching, business scalability, mentorship, but also all the other stuff that you need to know about the caps and product rates. I think that's really unique because a lot of companies don't have that. In fact, I don't know of any other company that has that type of unique structure that you present. And that's heavily needed in this space because it's more than just learning about, hey, what this cap rate is. Anybody can look at a carrier rate sheet. It's like, how do I implement this in my practice? How do I actually grow it? How do I take myself to the next level? And so maybe you could share a little bit about how you help mentor and coach some of these groups and individual agents.
Absolutely. And you touched on it right there, Roy. Anybody can read a spreadsheet, but if you don't know how the product works, you don't know the uniqueness of the product itself and the money problems it can solve or the outcomes that it can generate, you walk by opportunities all day long. And
Mm.
one of my favorite things to do when I go into an organization is to sit down with the internal marketers, if I'm in an IMO or if I'm at an agent conference, is to sit down and say, what if your clients are looking for this? And begin to talk through the conversations they're having with their clients at the kitchen table and the dining room, in the den, wherever they may be meeting with those clients, and talking through those opportunities and letting them realize that inside the legacy suite of products, we have multiple carrier relationships, multiple products, and every one of our products uniquely solves different money problems. So inside of our suite of products, we can solve, 12 to 15 common money problems that an agent's going to run across as they're working with their clients and never have to leave the legacy portfolio to solve those problems.
Oh, that's amazing. And this is what you get with the Chuck Norris of annuities right here. So maybe you could share a little bit more about legacy because a lot of people think, is legacy an IMO? Is it a carrier? What is legacy? I mean, a lot of us have heard of Americo, Ameritas, the standard, and so forth, and integrity. But I think shedding some light on what legacy actually is, and also the distinction between Integrity, the conglomerate, and also Integrity, the individual carrier through Western and Southern. That would be nice for agents to know about that too.
Absolutely. The story of Legacy is very interesting. Legacy was founded by 34 years ago by a woman by the name of Linda Pitts. Now, Linda and her husband John were innovators in the industry prior to that, ran an incredible agency and ran an IMO and working with agents in the area of life insurance for many, many years. Linda's husband John was an avid skydiver. And one day, as he jumped out of his airplane, his chute failed. His backup chute failed. And John unexpectedly died doing something that he loved. Had
Wow.
it not been for life insurance that provided an income for Linda to be able to raise their two daughters and not have to worry about finances, then the story of Legacy wouldn't have existed. But John believed in life insurance enough that he provided for his spouse and provided for his daughters, that even though he physically couldn't be there, insurance provided the legacy for them to be able to live life and be able to send the kids to college, make sure the house payment was met, all the things they needed from John's income that was gone when he died. Life insurance provided that for them. But in the business, life insurance also created an opportunity inside that business because John had a business continuation plan in place that funded the ongoing opportunities to build something unique. And Linda paused because about this time, fixed indexed annuities were really coming to the market and were something brand new that nobody had ever heard of. And there
Hmm.
was nobody in the independent space that was designing and developing products for the fixed indexed annuity industry. So Linda had this brilliant idea as a legacy to her husband and a legacy to the industry. Let's create a company independent of any carrier, independent of any IMO, that is strictly a product design and development company. And that's what we do. We design innovative fixed indexed annuity products for major insurance carriers. We've done that now for 34 years. We were the very first independent company to enter that space. Fast forward 34 years later, we're still the only independent company still designing fixed indexed annuity products for major insurance carriers. We're not an IMO. We're not a carrier. We design the products and then we go to major carrier partners that underwrite those. And then we market those products through IMOs that are part of our network all over the United States. That's who Legacy is in a nutshell.
Got it. So, I mean, Legacy basically works with, I mean, I've bounced around through different IMOs like a lot of agents have, and Legacy has always been present there. So, pretty much all the main big distributors like you guys have access to, and you're a part of them.
That is correct. Yes.
Okay.
And the unique thing about us, Roy, is it's one contract, it's four carriers, and you mentioned them: Americo, Ameritas, Western and Southern Integrity, which is one of their subsidiaries, and the Standard. All four carriers under one contract. That's unique in the industry because you can be appointed with A, B, C, D, E carrier, but you've just got their products. With Legacy, you don't just have Americo or Ameritas. You got access to all four carriers and all the different products that have been designed with those carriers under one unique contract arrangement.
Hmm.
So not only is that attractive from a diversity standpoint, but all your production among all four carriers also aggregates for bonus, for trip credits, for access to our learning forums, and for all the unique things we do through our honors program to take care of the independent producer in the marketplace and incentivize them to grow their practice with us. Plus, they get the business development and all the other resources that I bring through the training side. And it's a very unique arrangement for the individuals that lean in and say, I want to be a part of it.
Yeah, that's really unique too, because that's one of the challenges like some agents have, especially us, like because we represent multiple different companies, like absolutely zero loyalty to one particular company. It's whoever's the best for the client. We just shop it around, best rates, best income, very easy. But it also goes against us a lot in the revenue side because if we were to just monoline sell just one carrier, we could hit their top tier bonus structures, we could go on all the trips. And sometimes we don't qualify for those because we're constantly shopping around. Whereas with Legacy, at least I have access to four different carriers and all of the production is aggregated. So I'm getting even closer to earn those additional comp tiers, to earn the credit incentive, and also to earn the back end additional support through larger case design and volume, which is awesome because in my opinion, the only other companies that really try to do that, you take like Midland, which is like a neutral company.
Mhm.
Great products, great company, nothing wrong with them. But then you're only having one track there. Or there's other carriers that just say, hey, look, you know what? We'll give you extra half a point comp or quarter point comp, and then we'll give you some additional back end service work. We have to have all of the business with us, and that's impossible to do if you're doing the right thing. At least with Legacy, you got multiple different options there.
Absolutely, you do. And the other thing you got to think about there is if you're siloed to one carrier and you're
Hmm.
focused on that for, let's say, trip qualification, and halfway through the year something adverse happens with that carrier, their rates drop or they get a downgrading, a downgrading in their ratings, and all of a sudden you can't sell that carrier anymore, or they're not competitive in the marketplace. Well, all your efforts up to that point have been lost if you were trying to maximize a bonus or have an opportunity to go on a trip. With us, if let's say guaranteed income's your thing and that goes out of vogue for a period of time because maybe a product's not competitive, you can pivot to other carriers in our portfolio and still be able to earn credits that all aggregate to count towards the bonus, the concierge support, the trip incentives, the loyalty programs, and the other things that we do.
Hmm.
That again is unique in the industry, and a lot of folks miss that.
Yeah, no, that's awesome. And then I think the other thing too, besides just the extra comp and everything else through the volume production, is the variety of product offerings. It's kind of hard not to find something that is good for somebody between all four of those major carriers, right?
Absolutely.
I know that Ameritas is on our income charts. They're up there constantly. The Standard has some great like rate locks
Mhm.
on their products, which is amazing. But on the Americo side, I'll share a little bit how when the Growth Commander first came out. That's back when they had their own dedicated website. This was when interest rates were super low. And what was impressive about Americo is that they seem to stay ahead of the curve, where we did millions of dollars in volume with that product because it was the best that was available out there. Then they came out with Liberty Mark, which is another great product as well. But one of the cool parts about it is that there's not a market value adjustment. Now, given the market value adjustment is completely irrelevant unless the client's intending on taking more than their free withdrawal or they're going to cancel the entire policy. However, the advantage for an agent, especially somebody newer into the space, that you want to keep it as simple as possible. On Americo, you don't have to worry about the market value adjustment, the additional conversation, all of that extra noise. It's literally here's your account value, here's your surrender value based on the surrender schedule. And the other thing that's nice about it too, they actually came out with a 6-year product during a time frame where there were I don't think there was a 5-year FIA in like 2020 or
Mhm.
2021. I mean, it just the pricing out there didn't pertain to it, but they had the 6-year product, which is awesome because we always tell a lot of our agents, like if you're going to be focusing on growth strategies, try to stay with a 7-year product maximum, in our opinion, because that way it gives the client a lot more flexibility. Nothing wrong with 10-year, but the 5 to 7 years is also a lot easier to sell, especially if you're relatively new. It's less of a time commitment. And
Mhm.
there's not too many carriers out there that have anything competitive in the 5 and 7 year. But I know that Americo does, and so same with some of the other legacy products out there. Plus, you don't have that market value adjustment conversation. That gets agents hung up all the time because if they're doing the right thing, you can't just say, oh, here's your non-guaranteed hypothetical illustrated value. This is what the surrender value is. No, that's not correct. We don't know what the surrender value is going to be because the market value adjustment changes daily, right? Whereas with America, guaranteed, like if this is the interest you received and you canceled it, this is what you would walk away with. I'm telling you, like if you're an agent that's relatively new or even experienced agent, you should look at the growth plays without a market value adjustment. It makes your life a lot easier.
Absolutely. And some of the recent things we've done with the Americo product line is we've
Mhm.
launched a new product called OptMark, double digit bonus on the front end. So if you think about the Gen Xers that your agents may be working with, we know from looking at the different demographics, in the marketplace today, they were the latest to get started saving for retirement because they were the most debt-laden generation coming into the world today.
Hmm.
And so we had that to deal with. And so many of them are getting ready to retire. And I was just reading an article in Plan Advisor today that many of them, and interesting, 60% of them believe that they're going to be able to retire comfortably, but only 27% have actually sat down to do the math and say, yeah, this is actually going to work. So there's this big belief versus knowing that they can retire. And when they do the math, sometimes they find out they're a little bit short. So
Hmm.
with the OptMark product as an example, they're going to get a double-digit bonus. It's 12 in most states, 10 in what we call the light states, to be able to jumpstart what they've already saved. And in that, we've created opportunities for growth in an up market, but also in a down market.
Boy,
So
there's some triggers on there.
we know historically the S&P cycles, and about every 4 to 4.5 years, the S&P has a downturn historically, going all the way back to 1956. Well, what if you could put a portion of your money into a indexing strategy that allows you to participate in that downward trend if the market does reverse,
Hmm.
and you get an opportunity to earn a credit on that? That's a unique opportunity. We
Yeah.
also have what we call dual growth strategies that can guarantee that your clients will never have a zero, even if the market's flat. They're guaranteed a flat 2% no matter what, but still have the opportunity for upside. So
Oh,
those are some of the innovations we're bringing to the Americo portfolio that really make that stand out right now as unique and different. And you touched on the eclipse mark with the strong contractual guarantees. You've got the ability between Americo and the standard to offer a 5 year with rate guarantees, a 6 year product with rate guarantees, and a 10-year product with guarantees. So you've got those uniquenesses that are there that
mhm.
can provide those strong contractual guarantees that you don't have to have that awkward renewal rate conversation because your
Yeah.
clients know in advance exactly what those renewal rates are going to be for the next 5, 6, or 10 years.
Let me ask you on that 2% guarantee, is that like at the very end of the contract they true it up like a minimum guaranteed value? Or if they literally, if the index is zero, in that actual year, they will receive 2% interest credited?
That is correct. Worst case scenario, they're going to earn 2%. The way
That's
it's
awesome.
currently priced right now, 2% worst case scenario, regardless if the market's up, down, or sideways. And
And
then the upside opportunity on that's currently capped at 5.5. But for your ultra conservative investor that says, I'd rather have, to borrow a phrase from Will Rogers, a return of my money than worrying about trying to get these stellar returns, and they're comfortable with 4 to 6, and you can guarantee them worst case is 2, best
yeah.
case 5.5. It's a great story to tell for that conservative investor that wants that guarantee and wants better than zero as your hero.
Yeah, that's awesome. And that's very unique because a lot of these contracts, they have the guaranteed minimum surrender value true up at the end of it. But then, clients and agents, they get confused about it because they'll say, oh, it's guaranteed at, 2.95% or 3%. I was like, well, no, not really, because that's multiplied by 87.5%. And that's only appreciated upon death, surrender, or, the maturity of the contract.
Mhm.
But this is much more cleaner where it's like, hey, worst case scenario, you're going to get two. Yeah, the upside is a little bit more limited because we're guaranteeing you that base rate. But for somebody who's hyper conservative, and I would argue that the consistency of just getting 2% on those 0 years versus a 7 or 8 cap, we'd have to do the math on it. It'd probably be equivalent to that
It's pretty
because at
close.
least
Yeah,
at least you're getting that compounding effect and you're not losing anything, which
right.
which is huge. That's awesome.
And there's no fee for that. It's a point to point annual point to point option. But
Mhm.
again, it was designed for that very specific reason to be better than zero as your hero.
Oh, wow. Yeah, that to me that's huge because we have a lot of folks that yeah, you could sell, 7 or 8 cap or 9 cap or 10 cap in today's marketplace, but then again, to your point, it may be zero, right? And it's like they may goose egg. They're not going to lose anything, but still, it's always more rewarding to show somebody an annual statement when everything is down. Even if they got 1%, they got more than their neighbor, right?
Right.
Or more
Exactly.
than on their other sets of money. And the trigger, a lot of agents forget about that, but it's powerful. Now, given the S&P is generally up, I don't know the statistic. I think it's like 77% of the time. But, for that other time that it is down, that 23%, especially now where we're tippy toppy and there's all kinds of stuff going on in the world, it doesn't, in my opinion, it's not a bad idea to throw some funds in there. Maybe it's 25% in that trigger. At least they'll get some level of interest. So if you have a
That's right.
trigger and then the guaranteed minimum, it's like you're hedging both sides of the bet. Like even if it's zero on that one bucket, you're still getting say 2%. And then you have money in a trigger. What's the average cap on a trigger? Around 5 also?
Roughly. Yeah.
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 I know those can change too, but that's amazing. So it's like worst case, if everything goes to hell in a handbasket, like you're still getting 2% on the upside potential, but you're also
Mhm.
going to get 5 on this portion, and then we have some just purely in the upside.
Right.
Like I would probably devise it up in thirds if I was
Mhm.
designing that strategy. And most people are comfortable because if you look at the historics of it, like I tell agents this all the time, remind people what the banks were paying them in 2020, 2021. It was like zero, right? I mean, what's to say we're not going to go back there? I mean, it's unlikely, at least the sentiment within the financial industry and what we're being told by economists, that like we're not going to see a spike in interest rates per se anytime soon. And so we might go back and revert down to that. Like even now, the average CD is like 2.5%, 3%. Money markets are around 3%. Banks are like 2 to 3. It was much higher when the rates were stronger, but now we're getting into that same sweet spot realm where we're still at nearly a 20-year high Fed funds rate. And that's going to help give us better rates on the annuities, and that the rates on the worst case scenario are what they could are still more than what they could get on like their traditional investments. That's amazing. And then they have the upside potential as well, which is higher. So
That is correct. Yeah.
it's one of the best times, in my opinion, to be in this industry with the rates and the demographics behind us. But not only the rates, but the products that are constantly being enhanced and changed. I don't know of any other carrier that does that, what you are describing, where you can at least get two, but there's still an upside potential. Normally, it's just way on the back end.
Yep. And we did that on purpose because we wanted to have something that was simple, that was easy to explain. And worst case scenario, if the market's flat or down, you're going to get 2%. If the market increases and you've got upside opportunity, you're going to see some of that if it grows. Yeah. And you're exchanging some upside for downside, above zero. And that's the trade-off. But again, for that ultra conservative investor, it makes sense. And if you go back and look at the historical returns of fixed index annuities over time, the average 4 to 6.
Yeah, that's true. And when we're helping people, even with a 10 cap or 50 par, I'm still telling my clients, if you are okay with getting between 4 and 6% over the course of this 5, 7, or 10 years, it's a great plan. Even though on paper, it's showing you 9 or 10% return. I
Mm-hmm.
want I want to under promise. I want to undersell this thing so I can over deliver. Because a
Mm-hmm.
lot of agents do the opposite. They put
Mm-hmm.
all this money into these random 2, 3, 4, 5 year index strategies that are excess return. And yes, they could work out, but they're not as consistent in the S&P. And then their clients are disappointed. Like, you showed me 18% return every single year and I'm getting 2. What's wrong? Or like, well, sorry, it didn't perform. But if you
Right.
base it on something that's consistent, I mean, you have to be real with it, right? If there's an opportunity to consistently receive 6 to 8, 6 to 8% on a good swing and 4 to 6 on an average swing, you're not going to see these huge double-digit returns generally, right? Because you're trading that for the consistency and the compounding effect. And if you do the math, like we talked about earlier, I would much rather get a consistent, say, 4 or 5% rate of return over a 10-year period than I would to get 3 years of zero and then the fifth year get 10%, right? I'd rather have that consistency because it builds on top of it. And
That's
that's what
right.
people in agency to understand.
Absolutely. I 100% agree with that.
So if people want to find out more about Legacy, what's the best way? Should they just ask their IMO? Should they call you directly? Should they go to Legacy's website? What's the best way for agents to learn more about this and how they can incorporate it in their practice?
So if they want to find out more about Legacy Marketing Group, the easiest way to get a hold of us is to call our 800 number, 800-395-1053. At the voice prompt, if you press number 1, that's going to take you directly to our internal sales desk. They can look up and tell you if your IMO is contracted. If it's not, and you're looking for an IMO that you could have an opportunity to be contracted with Legacy, we can direct you in the right place. That internal sales desk can assist with illustrations. They can work with helping you understand the product. They can do case design with you. We've got our own in-house suitability team to make sure that as applications come through the process, that they get to the home office in good order. Everything you need to support your business, we've built an entire team that can help serve and support you. And we have extended hours. We're East Coast to West Coast because all of our internal sales team work remotely across the country. And so we offer extended hours. So that's the easiest way to find out whether or not you've got a connection to Legacy. And if not, we can show you how to get that. They can also visit the website legacynet.com. That's legacynet, one word.com. But the best way is that 800-395-1053, and then just press 1 at the voice prompt, and you're right there with our internal sales desk.
Make sure you type in net. Yeah, I can't tell you how many times over the last 10 years of writing business with them, I've typed in just Legacy Marketing and it's a different thing. So just type in
Legacynet.com.
Legacy net. But
Yep.
that's another value add there too, is that you can utilize like Kevin at your sales desk and Susan that calls, these are great people. They've been there a very long time. Sometimes with these IMOs, you just get some newbie that's there. They work there for 3 to 6 months. You get a micro relationship, and then they're gone, right?
Yeah.
In my experience working with
Yep.
Legacy, they take care of their partners and employees very well. So you have tenure there, which you
Mhm.
want, because if you ask a question to most uplines or marketers about a specific product, they generally don't know. At least that's been my experience. And even some carriers, the people that work at the sales desk, it's like, dude, did you even graduate high school? You have a license? Like, it blows my mind.
Yeah.
I've never had that problem with Legacy. When I call it, if I want to get down and nerdy with it, they'll give me actuarial theory, everything else that I possibly need about the product. And then it's another support system. Maybe you call your upline and they're busy, they're out of the office, the FMO is not being supportive to you. You have the opportunity to work directly with Legacy, their sales team, and the pre-suitability is amazing, especially when you're dealing with replacements or you're trying to go a little bit higher over the net worth to solve an income need. It's always nice that, hey, can you check this out first? Because what you don't want to do is write the policy, get it all turned in, and then it gets declined. I have to call the client, hey, sorry, with the decline, I didn't, do my due diligence on it. That makes you look bad. So you can resolve a lot of those issues. Just make your life more simple. This business and this world is complicated enough. And reach out to Legacy, learn about their product suite, and you have to stay on top of it. A lot of agents, surprisingly, are very lazy inherently. I think to get your insurance license, you have to sign a deal saying, I will be unresponsive and lazy. So you need to avoid that and be different than most agents if you want to become successful. And you have to learn about other products. You have to stay on top of it. And that's why we do these podcasts and our trainings to help you become more aware of it, because we live and breathe this all of the time. So if you want more information, reach out directly to legacynet.com or give them a call. They're easy to find online. Again, check out for our annual conference. We try to keep these podcasts short because I'm an agent too. My attention span is very small. I hope you all got a lot out of it, and we'll see you on the next one.